Hello everyone, this is Sihan from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important instruments and their price movement predictions for the day, which falls on Wednesday, 22nd of September 2021. Let's begin with the gold, where in the previous videos we said that it is moving in a downtrend in the 4-hour time frame inside the sideways movement in the daily time frame, and recently, if we notice the 4-hour time frame, we can see that after rebounding upwards off of around level 1750, it formed a downwards channel in the 4-hour time frame, where it is currently being traded around the upper boundary of it, or around level 1782, which resembles a horizontal resistance level, as well as level 61.8 Fibonacci of the previous downwards movement, which started around level 1809 and ended around level 1741. Although we are moving in a downtrend in the 4-hour time frame, if we look at the daily time frame, then we can see that due to the formation of the low around level 1750 or around level 1742, which is higher than the previous low around level 1685 and is also around level 61.8 Fibonacci of the previous upwards movement that started around level 1685 and ended around level 1832, it further supports the breaking upwards to the upper boundary of the downwards channel in the 4-hour time frame in order to continue with the sideways movement and target around level 1809, then 1832, which resembles the upper boundary of the sideways movement in the daily time frame. On the other hand, by rebounding downwards off of around the current levels or by holding below level 1782, we will be waiting for the breaking down through the lower boundary of the upwards channel formed in the 1-hour time frame in order to end the current upwards correctional movement in the 1-hour time frame and the 4-hour time frame, where it will then be targeting around level 1750 as a primary target in the downtrend. However, the most probable scenario is the breaking upwards to level 1782 in order to continue with the current sideways movement in the daily time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that by moving around level 60, it supports the probability of rebounding downwards off of around the current levels to continue with the downtrend in the 4-hour time frame. That was it for the gold. Let's move on to the US dollar versus the Japanese yen. In the previous videos, we said that the pair is moving in a sideways movement in the 4-hour time frame as well as the daily time frame between around levels 109.10, which is the lower boundary of the sideways movement in the 4-hour time frame, and level 110.40, which is the upper boundary of the sideways movement in the 4-hour time frame. And recently, the pair started rebounding upwards off of around level 109.10 or off of around the lower boundary of the sideways movement in the 4-hour time frame. However, it is important to note that if we notice the daily time frame, we can see that there has been multiple weakness signs regarding the buyer's power in the current sideways movement due to the formation of lower peaks as well as the multiple retesting of level 109.10. We can clearly see that the pair has failed to reach the previous peak, which was around level 110.60, which also resembles the upper boundary of the sideways movement in the daily time frame, and instead formed a lower peak around level 110.50, and the last peak formed was around level 110.10. This shows us that the seller's power is currently taking over the buyer's power, and it further supports the probability of breaking down through level 109.10, which is both the lower boundary of the sideways movement as well as a horizontal support level for the pair in the daily time frame as well as the 4-hour time frame. And by breaking downwards through this level, it will support the formation of a downtrend in the daily time frame as well as the targeting of around level 108.30, then around level 107.50 as primary targets in the expected downtrend. However, if the pair doesn't break down through this level, then even though there has been signs of weakness regarding the current buyer's power, we are still moving in a sideways movement in the 4-hour time frame, and after rebounding upwards off of around level 109.10, it supports the continuity of the current sideways movement in the 4-hour time frame as well as the daily time frame, and will continue to target around level 110.10, then around level 110.40, or the upper boundary of the sideways movement in the 4-hour time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that it is showing the presence of the sideways movement by moving between levels 30 and 70, and recently it rebounded upwards off of around level 30 near the oversold area, which further supports the continuity of the sideways movement as well as confirms the current rebounding upwards off of around level 109.10 to continue the sideways movement. That was it for the US dollar versus the Japanese yen. Let's move on to the Australian dollar versus the US dollar. In the previous videos, we said that the pair is moving in a downtrend in the 4-hour time frame, and we said that it will be targeting around level 0.7280 to around level 0.7220. The pair reached level 0.7220, and the pair recently formed a downwards channel in the 4-hour time frame inside the current downtrend and rebounded upwards off of around the lower boundary of it, or off of around level 0.7220, where it is currently being traded around level 61.8 Fibonacci of the previous upwards movement that started around level 0.7105 and ended around level 0.7475. Therefore, it is expected to rebound upwards off of around the current levels, specifically since if we notice the 1-hour time frame, we can see that the current downtrend has shown multiple signs of weaknesses, such as the peaks and the lows being very closely packed. And another major reason to support the weakness of the current downtrend is that after the formation of a low around level 0.7220 previously, when retesting this level, the pair failed to form a lower low below it or even break downwards through it, which further supports the probability of forming an upwards correctional movement, even if it was a temporary one. And this will be confirmed upon the breaking upwards through the upper boundary of the smaller downwards channel in the 4-hour time frame, which will then extend to target around level 0.7290 as a primary target for the upwards correctional movement. Another thing to note is that if we notice the daily time frame, then we can see that, as we have mentioned in the previous videos, the previous upwards movement was a very strong one, and it is unusual for that in a downtrend, which further supports the weakness of the current downtrend and further supports the probability of forming a low around the current levels or around level 0.7220 before rebounding upwards off of it and continuing to target around level 0.7345, then 0.7475, which will be confirmed upon the breaking upwards to the upper boundary of the bigger downwards channel in the 4-hour time frame, or by breaking upwards to level 0.7280. If we notice the RSI indicator in the daily time frame, then we can see that after breaking upwards to the downtrend line for the indicator and forming a peak around level 62, it rebounded downwards off of it to retest the broken downtrend line and has recently started rebounding upwards off of it, which further supports the probability of rebounding upwards of around the current levels. If we notice the RSI indicator in the 4-hour time frame, then we can see that although it is showing the presence of a downtrend, however, it has failed multiple times to reach level 30, which proves that there are weakness signs in the current downtrend, and we can see that it has rebounded upwards off of around level 30 near the oversold area, which also supports the rebounding upwards of around the current levels in the 4-hour time frame as well. That was it for the Australian dollar versus the US dollar. Market Equity wishes you successful trading and have a nice day.